Hi everyone, and welcome to another Aegis Business Services tutorial video. Let's jump right in and pay an employee in advance in Xero. We're going to start by creating a new account. We'll do that from Accounting, Chart of Accounts, and we'll be creating a new asset account. Today we will use 640. We'll go to Add Account, and we will make this a current asset. Code we will use will be 640, and we will call this Wages Advance Receivable. We'll also ensure that this account is BAS excluded, and we would also like to show this account on the dashboard, and we would also like to enable payments to this account. We can now save this, and there it is ready to use. So now we can pay our employee the advance. We can do this by going to Spend Money, selecting the bank account, and then adding all the details. We will use Oliver Gray, and we will date this the 10th of July. The reference we can use for this is just advance. Oliver would like $200. In the description we can just put advance again, one quantity, $200, and here we use the newly created Wages Advance Receivable account. Also again ensuring that it's now BAS excluded. It's still BAS excluded. We can then save and pay this with our next EFT payment. And then also go back to the dashboard, and we can see now that there's a receivable in there for the $200. We can see that on the dashboard. So before we run the payroll, what we need to now do is set up the deduction account. We can do that by going to Settings, Payroll Settings, from here we can go to Pay Items, and select Deduction. From here we can add the deduction and just choose None. The deduction name will be Recovery of Wage Advance, and the account will be the 640 Wages Advance Receivable. We don't want to reduce the pay-as-you-go withholding, and we also don't want to reduce the superannuation guarantee. From here, we can just click Add, and it should come up in our list down below. Once that's completed, we can now run the payroll. So when it comes to the day, we can pay employees, add a new pay run. For this one we will select the 14th. There's Oliver. What we now need to do is to make sure we reduce his pay by the amount of the wages advance that he's already been given. So everything stays the same. Well, what we do here is we add a deduction line, and we look for our recovery of wage in advance. We select that, and then the deduction will be the $200 which we paid a few days ago. You'll also notice when this updates that the employee's net pay has been reduced by the $200, but it has not altered the tax or the superannuation. We can now save the employee card, go back to the pay, and once we are happy, we can post the pay run. So to ensure that everything has gone through correctly, there's two things we can do. Firstly, we can now go back to our dashboard and note that our wages advance receivable is now 0. Another way to check for the actual amounts is to go to your accounting and your account transactions. We can look for the account, which is the 640 wages advance receivable account, and we can update. We can see here now that on the 10th of July, we paid Oliver the advance of $200, and on the 15th with payroll, we deducted that $200, and the running balance is now 0. So everything is as it should be. Thank you for watching, and if you have any suggestions for further videos, please let us know in the comments. Don't forget to like if you found this helpful and subscribe to be notified of new content.